Okay, my beautiful friends, here we go. It is Friday, finally, February 10th, 2023. I don't know about you, but this thing is it's too freaky for me. It's too freaky for me. I think you two would have to agree with me. Look, what am I talking about? Okay, let's put a perspective on the goings on here. It's troubling, and it should get you, I don't want to say alarmed, but a little bit concerned. I'm talking about this issue in the debt market. Okay, it's been pretty erratic as of late. Clearly a sign of instability. You know that already. The debt market, ticking time bomb, it's insolvent, period. And without more fuel, this whole thing is going to go up in freaking flames. Now, so we're now seeing bond yields climb, and that again is a bad sign here. What does it mean? Somebody out here is dumping debt, and without another entity making up the difference here in the United States, that would of course be the Federal Reserve, getting into the market and buying more debt, it's just over. It's just over. Now, we witnessed a very similar scenario towards the end of last year. You remember that. And I said, I didn't think central banks are done. They're going to get back into the market. They're going to buy more. And that's exactly what happened. Now, again, without action here by central banks collectively to stabilize this debt market, to get in here and buy more debt, to keep rates suppressed, it's freaking over. It's over. Everything's going to change, but fast. Now, the MMRI today crossed 241. We are 9 points away from the first red line in the sand. And I can promise you that if we hit that, this market is not going to like it at all. If we surpass that, it's going to hate it even more. We've seen this before. I still believe, and I'm going to tell you why again, I don't think central banks are done. I think they want to buy more assets. They want to continue to inflate. They want to create more dependency on the system. It's absolutely working. What did we find out just today? People are again resorting to having to borrow just to make ends meet here. The middle class is going extinct at an astonishing pace. You knew this was going to happen from a decade ago. When I came out here explaining we're going back to a feudal system, wipe out of the middle class, extreme haves, extreme have-nots, and it really is playing out exactly as we expected it to. Now, we got, on top of this issue here with the debt market, which is a clear and present danger, it's a concern. We're not going to freak out about it. Because again, in my belief, I believe, again, central banks aren't done. You are free to believe whatever you want. But again, even if, let's say if Greg Mannarino is wrong, and central banks are about to let this whole thing, melt down at a free fall in the stock market because of the meltdown in the debt market, we're still in the right spots. For those of us, including myself, that are long this market, yes, your long positions are going to take a hit. However, you should be heavily in these things: physical gold, silver, looking down the road here, commodities. Maybe you own a commodity ETF. I recommended a few of them over the last several months in my free newsletter. You all know that, okay? I think you need some cryptocurrency in your portfolio. I think cryptos are going to benefit as well when the meltdown occurs. It is going to. Now, we got warnings from Jim Rickards. We got warnings from Michael Burry. Yesterday, we got, who was it, Morgan Stanley? A Wall Street superbank warning of a massive disconnect in the stock market. And today we got another warning from Bank of America. Listen to this one. Bank of America is warning that a day of reckoning is coming for the stock market. I mean, duh. And another duh on top of that. We all know what's coming here, people. Every single one of you that follows this blog is keenly aware. You're prepared mentally, physically, spiritually. You're making the right connections. You're getting together with like-minded people. We are going to need each other more than you can possibly imagine when this fantasy land becomes very real. It's going to get very, very real, and it's already getting real for a lot of people here that are struggling to pay bills. That are continuing to swipe those credit cards just to try to make ends meet here. As central banks, none more so than the Fed, are creating dependency on the current system. Dependency on the current system, because when this whole comes down, these same people who are dependent on that system are going to beg and plead for help. And then they're going to get it in the form of a new system of maximum control run by central banks who run the freaking world as it is. Anyway, so on the back of this issue that we're seeing here with the debt market, we got, like I said, 10-year yield higher today, MMRI crossing 241, relative strength of the dollar stronger. You got crude oil getting bid higher. Imagine my shock there. You know where energy is going. Natural gas took off today as well. Gold and silver fell under some pressure. Cryptos fell under some pressure as well. Okay, that's where we freaking stand here with this entire thing. So look, does any of this at all surprise you? I don't think so. If you're new here, and there's a bunch of you that aren't new here, welcome aboard. Number one. Number two is what I'm trying to do, what we collectively are trying to do, because this is a big family, is gain an understanding on what's happening, why things are going the way they are. Things are not out of control at all. They're being guided in a very determined way by central banks, pushing the global economy off of a cliff. Okay. At the same time, creating this environment of inflation. At the same time, raising rates. In other words, they're charging more for the debt that they are issuing. Imagine having that kind of power, being an institution that could just do whatever they want to. They can charge more, they can charge less, never happen, for the debt that they are issuing to the world, making people's lives harder, deliberately trying to slow down the economy, because that's what rate hikes do by crushing demand, crushing the consumer who's already suffering in this environment. I mean, what do? They put us through an entire scamdemic. They make us wear face diapers, and they pump us full of whatever they want to pump us full, and you have to get it or you're going to lose your job. That's how free you are. In this country and around the world, of course, you're free to do nothing. Okay, you're free to be a slave to their system. And we, you and I, need to find every mechanism to sidestep it or to make the system that they've established, that's their system, work for us, not against us. And we're doing that, again, by being long commodities, gold, silver, physical things like that here. As I said, you need some cryptocurrency in your portfolio, in my view. You do what you want with that. Being long this market, at least for now, okay? The S&P 500 year to date is up 6%, okay? Last month, this market really did well. Why? Rates were a lot lower, and crude was getting bid up. Well, actually, it was pretty wild ride with crude oil, but again, the trajectory is higher. And as you already know, the unholy trinity, what's the unholy trinity? Crude oil being the lifeblood of the military-industrial complex. If it gets bid higher, pulls the energy sector higher, pulls the financial sector higher. You got all this down already. Okay. You got the 10-year yield, which is the benchmark, global bond yields. The bond market is the biggest tell on the face of the earth with regard to where this market's going to go. And then you have the relative dollar strength. So crude oil, 10-year yield, or bond market as a whole, relative strength of the dollar. These things play nice. Market goes higher, but right now we have an issue. We have a problem. And maybe it's whatever bank it was yesterday warning about the massive disconnect in the market, or Bank of America here, a day of reckoning, or Michael Burry, market's about to melt down, or Jim Rickards, we're getting a crash by the middle of the year. Okay, we're getting a lot of warnings here. If we see, look, we don't have to guess this stuff here. We have the MMRI, which is the best market risk indicator you're ever going to find. Ever. That's the truth, okay? It's telling us right now we have a problem. We need to pay attention to that. Does that mean we should run to the hills yet? I don't think so. I don't think so because I still firmly in my heart believe central banks are going to pump this more because they're not done. And I want to hear from you. Do you think central banks are done? Do you believe, is your intuition right now telling you that central banks are about to pull the plug on this, that they're going to allow an implosion to occur here in the debt market? Now, part of this, look, there's always that risk. Okay, but I want to hear from you. Do you believe that? We'll see. With an expanding war, with more weapons and weapons packages and more cash going over there, that's a mechanism to inflate as well. And everything else they want to throw at us. I still believe, as I've been telling you this entire video and for a while, I don't think they're done. They're going to buy more debt. We will see very soon. We will see if I'm correct very, very shortly. Keep your eyes on the MMRI. You should watch it every freaking day. It's free, so why not? Again, link in the description of this video. We're at 241. At 250, problems are going to really start. At MMRI 250, we're going to have a problem. And then we may have to reevaluate things at that point. That's the first line in the sand. Let's see what happens if we get there. Or are we going to see some miracle occur where bond yields start to drop? And of course, that would be bullish here for the equity market. In this environment, things, it depends on a lot of factors, but in this environment, that's how it would play out here. I mean, think about it. What have central banks done since the last meltdown? Suppress rates, suppress rates, suppress rates, suppress rates. What has that done? Reinflated a stock market bubble, reinflated a housing bubble, and all this is going to reverse. And it's going to change everything, people. Everything is going to change. So with that said, look, we're going to be cautious. We're going to raise our awareness. That's what we're going to do. Okay, couple of announcements before I let you go. So I've been doing this midday live stream. A lot of you seem to be somewhat disappointed because you want me to do it later so you can participate. I get that. So starting on Monday, I'm going to try something here. All right, I'm going to do my morning pre-market report as I always do, pre-recorded like this. And then I'm going to skip the midday live report altogether, and I'm going to do a post-market wrap-up live right after the closing bell. So like 1:05 p.m. Pacific Standard Time, 4 p.m. Eastern Standard Time, like right after the bell. I'll come out here and I'll do it, and hopefully more of you can participate because my email box lights up. Greg, I missed it again. I can't watch your live stream. Please make it later. So look, as I said, I'll do whatever you guys and girls want me to do, and I'll try mixing this up a little bit. So come on Monday, that's what I'm going to do. But I'll tell you again on Sunday when you see me for my markets to look ahead. Maybe we'll have a little clue here as to where this debt market is going to go. We'll talk about it on Sunday. But as I said, let's just raise our awareness, keep our eyes and ears open, just getting a grasp of this entire thing. All right, people, look, so it is Friday. What we're going to do is what we always do. Bring it in. Are you ready? Bring it in. Love each other. Care about each other. Be charitable. Please share this video. Comment. I want to hear from you. And I'll see you Sunday, as I said, for my markets to look ahead. Have a great and safe, happy, tomorrow, because you're going to see me Sunday. Well, have a happy Sunday too, of course. And every day of your life. Every day above ground is a good freaking day, in my view. I'll see you later.